And speaking of layoffs, Salesforce cut 4,000 jobs in their support division. CEO Mark Benioff revealed on a recent podcast that his company has used AI agents to replace around 4,000 customer support division employees. Now, here's the official narrative, yeah? Because he made a statement a few weeks ago that that's not going to happen. It has. The AI efficiency justification from Mark is basically that agentic AI is now doing a significant portion of the work, and that's basically allowing the company to need less heads in its customer support division. Right? So the public story and the public narrative is AI is so good, it's making humans redundant. So is that really the case? Well, we're going to dig down into that. But as I said, the announcement comes just weeks after Mark told the 2025 AI for Good Global Summit that AI wouldn't wipe out jobs. It wouldn't lead to cut jobs. Instead, they were going to work together. But now AI is so good, you know what? I can actually lay people off. Yeah, I can save money. And that's now the official storyline. But let's look at how many jobs have been cut, right? 4,000 right now. Don't forget the 1,000 that were cut at the start of the year. But the 4,000 itself is a reduction of over 40%, right? In one division. That basically makes this the most dramatic AI-driven job cut in SaaS history. Now, the timing is interesting. As I said, the official storyline is I need less heads because AI is so great. But Salesforce just reported a strong quarter and then issued a weaker than expected forecast. So guys, how do you offset that? Cut jobs, right? Hey, you got to keep the investors happy, right? The hypocrisy of his statement and the complete contradiction of it is not lost on anyone, right? In fact, I don't even know if hypocrisy is the right word, but the contradiction of his statement that AI will augment workers isn't lost on the fact that he's literally then just turned around and gone, well, actually, they're doing such a great job, we don't need them. But is AI a scapegoat here? What do I mean by that? Could this be a super convenient excuse for companies that overhired during the pandemic? The AI efficiency, or should I say the AI efficiency narrative, is perfect, right? To spin layoffs as a strategic forward-looking move, rather than basically what it could be, which is a painful correction. And a lot of companies are going through that, which is there was a lot of hiring and overhiring during the pandemic. That means there needs to be a market correction. We spoke about this in last week's episode. Or are Salesforce doubling down on AI? Now, we've actually covered this in the last couple of episodes. Yeah, we've spoken about AI native CRMs are on the rise. They're getting funding, and maybe they are providing a real threat to legacy platforms like Salesforce. We saw last week, Oracell raised money. We saw the week before, Attio raised Series B funding, $52 million. If this is the case, and they're providing a real threat to Salesforce, and as a result, Salesforce needs to delve even deeper into their AI offering, Einstein, what does this mean for the remaining Salesforce workers? Let's watch this space. Now, in other news, corporate taxes and SaaS. Governments are raising corporate taxes to manage inflation and debt. We know that. Well, that's the official storyline anyway. Now, SaaS companies are feeling the impact. Why? Because they rely on capital, they rely on funding. A lot of these businesses operate also across multiple countries. So what is the actual impact? Well, the rising tax burden combined with the current funding climate is creating a super challenging environment for most SaaS companies, if not all. Here's what it means in reality. Shrinking profitability. A higher tax directly reduces companies' net income. For SaaS startups who are already operating on super thin margins, most of whom are or some of whom are not even yet profitable, this can make the path to a positive bottom line even more difficult, even more almost impossible. It puts extra pressure on them to be hyper efficient from day one. No settling in time, no grace period. They need to be efficient from day One, because that is what aligns with VCs and investors today. Higher taxes can also decrease a company's post-tax returns, making it a less attractive investment for VCs and investors. This can lead to a reduction in the available capital for reinvestment into growth initiatives such as R&D, marketing, hiring. You're seeing this in a lot of businesses. Yeah, marketing spend is getting cut back. Hiring is on a downward trajectory. They're expecting more from less reps. The global minimum tax adds a new layer of complexity for SaaS companies as well that operate internationally. They now have to navigate a maze of different rules and may be subject to additional taxes if their operations in a specific country are taxed below the 15% minimum. That makes international expansion more complex and guess what? More expensive. Now, the focus on efficiency and profitability can lead to a reduction in headcount, which is what we've talked about, which is what we've been seeing last week. We saw 36% of businesses had cut their SDR teams down, 25% businesses cut their AE teams down. When a company is squeezed by both a tough funding environment and a higher tax burden, where's the first place they're going to look to cut? The labor. And that is what has happened, right? Salesforce, they've cut 4,000 staff. Other businesses across SaaS we've seen made major cuts in the SDR and AE space. And let's be real, guys, tech layoffs aren't slowing down and corporate taxes aren't going away. In fact, they're just adding fuel to the fire. SaaS companies are already under the microscope. Investors don't want fairy tales anymore. They want profit, they want discipline, and they want it all yesterday. Here's the truth, guys. When governments implement these corporate taxes, a lot of businesses don't stick around out of loyalty. They up and leave. They take their cash with them and off they go to a tax haven somewhere abroad. Yeah, they take money out of our economy. Or the ones that stick around cut jobs. Again, they operate more streamlined, they spend less money, reducing the amount of money in the local economy. You've heard that stat. Millionaires are bailing on the UK by the hour. That's not a coincidence. That's what happens when clueless policymakers think raising corporate taxes equals free money. Spoiler alert, it doesn't. So where does that leave you? If you're an SDR or an AE, you need to sharpen your skills, drive results, and make yourself impossible to cut. Because in this market, there's no middle ground, guys. You're either indispensable or expendable.